Hello and welcome. You tune into Your Trades. I'm Ankita Saxena, and this is the show where we take you through the roundup of how the markets shaped up in today's trading session and also for the week. And remember, it's a truncated week. We have Holi tomorrow. So today is the last day of the week for trading, and therefore we'll get you a wrap up of how the week shaped up. Well, in the first up today's trading session, both Nifty and Nifty Bank, they both paired morning gains. In fact, they both ended, Nifty ended with cuts of 0.6%, and Nifty Bank also gave up all the morning gains, ended the day absolutely flat in the red towards the lowest point of the day. But for the week, Nifty hit 2-week high in this week's, it hit its 2 weeks high but closed in the red. It was mainly dragged by the likes of IndusInd Bank. Now, IndusInd Bank, we all know, was down almost 27%, after that news of the derivatives, the problems with the derivatives directly coming in for IndusInd Bank. After that, 27% was the cut that we saw in IndusInd Bank. After that, we also saw some bit of a pickup, some bit of a reversal coming in IndusInd Bank since yesterday. But nonetheless, we were dragged down by IndusInd Bank. Nifty mid-cap was also down 1% in this week's trading session. Vodafone Idea, AU Small Finance Bank was leading the losses for mid-caps. The small caps also down 2.5% this week. And the other pack that was doing that failed very badly over the week was Nifty IT, and the weakness came in from the US markets. In fact, the Nasdaq was doing poorly, and of course, the threat of a recession in the US is weighing down on the Nifty IT index. That was down, it hit its 8-month low this week. It was a top sectoral loser. Also, it was dragged by L&T Tech and Wipro. Nifty Metal hit its 2-month high. Metal was a pack, the shining beacon, if you will, in this week's trade. That hit its 2-month high, but closed in the red today. Also, Nifty Energy hit its 3-week high. That also managed to close in the red. Nifty Bank also hit 9-month low, mainly dragged by IndusInd Bank, like I mentioned. We also had another important piece of news that the SIP numbers were down on its 3-month low in the month of February. We were scaling those record high levels on SIP inflows, but for the month of February, we saw SIP numbers hit a 3-month low. Realty, auto, and the PSB sectors also closed the week in the red. To tell you what, let's get on board Sudeep Bandopadhyay, who's the group chairman. Indie Trade Capital joining us, and Kunal Bothra on the technicals. Hi, good afternoon to both of you. Thank you so much for joining us. Kunal, I'll come to you first. Look at this week, Kunal. If you look at the Nifty, we did see some bit of a bounce back, and then again we closed our day in the red again, although we paired all those morning gains as well. So Nifty is facing resistance somewhere around the 22,600 odd levels. For the last 4 to 5 consecutive sessions. Going ahead in the coming week, do you see that those levels, Nifty scaling those levels? What are the levels that you're working with?
I think, good afternoon. My sense is that we are just about going to more of a consolidation over here. Don't expect any major kind of an uptick because, over the last 1 week, in fact, or, good part of this week, there was a point where, the global markets were going to a sell-off or into a sharp correction. Our markets remained resilient. But then, when came a point when you saw bounce back coming into many of the global markets, our markets did not participate at all. So, the market breadth had been mixed. Yes, there were a few, green spots where the sector participation started to improve. For example, some of the sectors which you mentioned, the likes of metals, etc., real estate stocks, started this week, made a comeback. But then they lacked, a strong bit of follow through. They lacked punch for themselves in terms of carrying forward the momentum what they've sustained over the last few days of price action. So that, I believe, is a concern for the markets. And when you see that the indices struggle to break past above a resistance, even with sectors the relay action coming out from sectors, that's generally an indication that the markets are going to a phase of consolidation. The range for consolidation, what we're looking out for is 22,200 as a support and closer to 22,550, 600 as a resistance for the index.
All right, so consolidation is what you see on the charts, Kunal, going ahead. On the charts, we see consolidation. Sudeep, that's what Kunal is saying. What would in your opinion, how are the markets likely to shape up? Because we do see a lot of global weakness in the global market, especially the US, and even in Indian markets now, we have entered a long corrective phase. Going ahead, do you also see consolidation coming on the benchmark, and even your view on the broader markets, because the broader markets are seeing a greater drubbing in trade, more than the frontline index, and we have corrected fair bit as far as the broader markets are concerned. Is there more downside to it? What are you penciling in?
Well, I think we have to live with volatility. There is tremendous amount of volatility in the markets worldwide, and you're absolutely right. Volatility is coming from multiple policy announcements on a continuous basis from US. There are policy flip-flops as well, and market doesn't like volatility, and that volatility and continuously changing policy landscape is creating uncertainties, which is what we have to factor in as we go ahead. Now, in this environment of global uncertainty, we have to also remember that there are certain things which are happening right in India. Particularly the inflation coming down is an excellent thing for India. And this enables RBI, central bank, to reduce the interest rates in their next rate policy. And that should augur well for India's growth going forward. So while the volatile environment continues, there are silver linings as far as domestic economy is concerned and domestic markets are concerned. So we believe that markets will remain volatile, but there will be a positive bias going forward. I'm not saying that market will start a continuous upside, but the downside to a great extent is protected, is what I believe. I don't expect the market to go down significantly from current levels. Yeah, it may keep hovering around this level, go down few points, go up few points, but I think we will start seeing some amount of recovery in Indian markets from probably end of this month, and definitely in the month of April once the credit policy cuts the interest rates.
Interesting take there. We might see some consolidation, till the end of this month, but there is a beacon of hope come the next credit policy. We could see some recovery coming in the markets. On that note, let's slip into a short break. Don't go anywhere. We'll be right back for more. Welcome back. You tune into Your Trades with me, Ankita Saxena. Well, we were questioning both the market experts, Sudeep Bandopadhyay and Kunal Bothra, on how to play these markets. Kunal, you mentioned how you see consolidation in the markets going ahead also, but I see two buy calls coming in from your end. Tell us, what are these two picks that you have on your radar?
Yeah, and both of these stocks which I have are two of the stronger names so far over the last 3-4 months of the market volatility. One of them is Manappuram Finance, the stock which has looked extremely strong, range bound, trading above the long-term averages for the past many months, and at current levels it's on the verge of a breakout of a multi-year high above the 200 plus mark. So would look out for targets in the range of 220 plus for Manappuram Finance. Stop loss could be kept at 200. And the second is upon Godrej Industries. I think it's been a revelation of a chart in the last 1 month. The stock had jumped up almost 30% in a matter of few days post at a major time-wise consolidation. But the best part about the charts for Godrej Industries is the volume jump which you've seen in this last 1 month of price action, where the volumes have on a weekly, monthly basis have gone to multiple times with respect to the previous weekly and monthly time frames. So that indicates that we are looking at a potential change of trend for Godrej Industries. Maybe the stock could consolidate for a few more days before it inches up higher. Would look out for targets in the range of 1180. Stop loss could be kept at 1100.
All right, so those were your buy calls from Kunal. Coming to you then, Sudeep, in this market volatility, where are you seeing pockets of value? How does one firstly play this market? And are there any sectors that you're looking at, especially, when you talk about the metal sector, that's really shining away right now. And, there could be, a fair bit of re-rating happening in the metal sector. And do you see value in the metals? And of course, the exact opposite of that is the Nifty IT that has seen a lot of drubbing. And are you likely to see more pain in the IT counters?
Yeah, look, as far as metals is concerned, we do like Tata Steel quite a bit. I think Europe is going to spend a lot of money on rearming itself. And that means demand for steel in Europe will go up. So Tata Steel's European operations which were a drag, will probably turn around very, very soon. And that should improve the overall performance of Tata Steel. So Tata Steel at current level does look interesting. As far as IT is concerned, I think there is a genuine concern on the IT sector because US growth is expected to be slowing down. And if US growth slows down, obviously Indian IT companies, the fresh orders as well as the volume of work is expected to suffer. So under the circumstances, IT companies are getting hit on a continuous basis, and IT index is also coming down. But even then, I would say some sectors which are performing and outperforming and related IT companies will do well. Let's take example of Coforge. Travel and tourism is doing well and is expected to continue doing well. So maybe Coforge should be treated differently from an emphasis which is focused on BFSI.
Right.
So, if we know that BFSI will suffer if the growth suffers in US, but travel tourism may not suffer to that extent. Okay.
Right, point taken, Mr. Sudeep. But we're completely timed out in this edition of Your Trades. Kunal and Sudeep, I'd thank both of you for joining us. With that, it's a wrap on this edition of Your Trades. Thank you so much for tuning in.